And today is Thursday, January the 14th. Let me get started with some housekeeping statements. In order to look at what the account did last year, and if you have an account like that, you can look at that too. All you need to do is go back and say, set your date here to the end of the year. Okay, so you can go 1st of January 2020 to December 31st, 2020. Right there. Okay. Give it a minute. Make sure that there is no symbols there. Yes. Make sure that we got this right. Monitor tab. There we go. Account statement. Then click on the dates and you can arrange. Let's say 1/1/2020 to 12/31/2020. Okay, and that gives you all the trades that I have made. If you don't put any symbols, let's move that out of the way. We can do that some other time. What I wanted to say, to show you is the results. We can click here on the P&L for the year, okay, and then you can see the losers and the winners, and the total gain was 36,656. Okay, we can use a spreadsheet if you wish. Let's do a spreadsheet here. So the total gains was 36,656.32. That's not including commissions. Trading commissions were 1,346. 13,4009. Let's increase the magnification here. And then we subtract. And that gives you our total gain for the year. Okay, so, well, the total value at the end of the year was 91,631.15. So our original value would have been that 91,000 minus the gains without including commissions. Okay, so then the commissions are out of the way. So this is what our account value was. We can say, we can set this as in a select spreadsheet as in dollars. Okay, so that was our value. So our gain was 36,656 minus the commissions, 35,000. Divide that by the original value, and we transform that into percentage. 64% gain. That's, to be sure, was exceedingly good. That's because we started with low volatility, then there was a huge spike in volatility right off the bat, and the rest of the year has to remain pretty high in volatility. So that's the result. Okay, excellent. And yes, sometimes we do those, sometimes we do not. I think on average, we might say that we might make 30% a year, give or take. Okay, some years you do well, some years you do not, and this is extraordinarily good. And I believe that if the market could drop again as much or more than it did early last year, and we could make some type of money like that. But the important thing is that you are doing this routinely, the same approach, month after month after month, week after week, even if it seems like you're going nowhere, because you're never gonna know when is that change going to occur. Okay, let's move on. We don't want to spend too much time on that. Just suffice it to say that it was a very good year for us last year. Now, let's go through the list here and see what needs to be rolled over. Symbols. And let's organize this alphabetically so we make sure we don't miss out on anything. CMCSI, analyze trade, and the delta is slightly positive. And we see here January 15th, 47 calls, and that's due to expire tomorrow. So we need to do the rollover, and we're going to do it to February the 12th. Okay, very simple. Analyze rolling. And doing that will neutralize my delta, make them slightly negative. Okay, let's move to make sure that you sell 12 February. Why would I do that? Because that's about 30 days to expiration. 29 to be precise. Okay, so that's good. That's as much as you're gonna get. We're gonna get 35 cents out of that. It might not seem much, but we need to roll over those calls that are deep in the money. Okay, and we need to do that before tomorrow, before the closing tomorrow. Otherwise, you end up with short stock on Monday. That's not a big deal either, but you may as well take care of it now. And that gives us $350. We set that up and filled. Okay, let's look at the risk graph again, and that's delta positive. That's our trade right now, delta positive. Good. Let's move on to DHR. And here's February 19th. There's plenty of time before expiration. And I don't see any need for changing anything. Let's look at the chart first. Yeah, it looks like, it has earnings coming up on the 28th before the market close. And our next expiration is February. So let's see, January the 15th and 7 days. Yeah, we have until next week. Perhaps next week we'll close this trade, depending, because the earnings are coming up. Okay, let's move on to Disney. January 22nd, and that's 8 days from now. Okay, we might want to do a rollover or close the trade. Yeah, I think I'm gonna leave it alone. Yeah, we can do the rollover certainly. Analyze rolling. And we can do it to February the 19th. And that makes our trade quite bullish here, delta positive. Without doing anything, it's delta negative. Okay? I think it's too early for a delta positive. If we did the call side only, to February the 19th. Yeah, that looks a little better. It's not so delta positive. I wanted a little delta positive, not a lot. Okay, so let's do that. The put side then, next week, we might sell puts. The puts here, the January 22nd 70 puts may be closer to expiration then, and they might tend to go to zero. We could probably trade them, buy them back by close to zero. So let's do that. Let's leave that alone and only do the call side. Let's move on to the LTR. January 29th, we need to do nothing. Facebook. Facebook has been moving down rather nicely. And our options here are 295 and the stock is trading at 247. If we look at the chart, as I was telling you before, it was in a triangle and now it's broken below the triangle, it's below the Ichimoku cloud, and earnings are coming up. So we want to take our profit now, okay, while remaining bearish. So how do we do that? Well, we have one outstanding put. What I mean by that is we have one short put and two long puts. Subtract one from the two and you get only one outstanding put. And that means that's the one we can change without affecting our credit, our margin at all. So let's do that. Analyze rolling. Only one of them. I'm closing the 195 February 295 put, and we're going to buy one very close to the current price. That would be 247. Okay, so let's say 245. Buy the 245 put, same expiration. That's February. And look, we get a huge bundle of credit while still remains, it's still negative, still bearish. Okay, that looks great. Okay, let's do that. Confirm and send, and we're going to get $3,707 credit for doing that. And there you go. That's a profit-taking situation. We're still negative, still delta negative. But suppose the stock jumps, unexpectedly to 270 or more, you would still make money. Okay, in this case, Logi, our strike price, that's Logitech, we have, our strike price is 90 and the stock is trading at 103. Way up there. Okay, so that's the opposite of the Facebook. This is way out of sight. And look, earnings are coming up. So yeah, this will be the time to either close the trade or take substantial amounts of profits. Okay, so let's say if we sell 2 March 90 calls, that leaves me with delta 60 deltas. How about if I sold 3? That's negative. Okay. If I sell 2, remember I have 4 short calls, 8 long calls. Difference is 4. That's my outstanding calls. So I have 4 outstanding calls. That means those are the calls that I could sell, roll up, you name it. Okay? Doing that, selling them outright, selling the 4 of them, will leave me quite bearish. I don't want to be quite bearish. I want to be close to neutrality. So how about if I did 3? Then I still end up with delta negative. I want to be close to neutrality while still being delta positive. See, delta positive. So if I did 2 only, I end up with 58. Still kind of high, but I can sell one more next week. So confirm and send, and we are left with 2, and right away got filled. Okay, I'm left with 2 outstanding calls. How about if we roll it up, 2 of those outstanding calls? Would I tend to go to neutrality without being 60 deltas? Something like 20, 30 deltas will be good. Okay, analyze rolling. I'm going to do only 2, and that means I'm going to sell 2 of my March 90 calls and buy 2 105 calls. Same expiration, March. Okay, that's still negative, but if I did just 1, 26, that's That's about perfect. Yeah, I like to do that. Confirm and set. And I get an additional $945. Let's move on to Microsoft. January 29th. And that expires in 15 days. No need to worry about that too much. Qualcomm. Okay, here is how do you decide when to do first your deltas? Are your deltas more than 100 perhaps? Then that's equivalent to 100 shares. Okay, so that doesn't look too bad. Nonetheless, my calls here, the long calls, I have 2 outstanding calls, 4 long calls, 2 short calls, subtract, we end up with 2 outstanding calls. And those we can sell or roll up. If I were to sell one of them, just one of them would do, then it becomes delta negative. Okay, how about if I roll them up? I can roll 2 up or 1. Why would I want to do that? Well, because the current price is well above my smiley face. That means it's well above my strike price. So we want to take profits now. Okay, that's the only reason. And it's nice to see that when you wait, you don't look at these trades for a week, you get to this kind of nice surprise. Okay, let's do analyze rolling. 2. And then we're going to go up to, let's say, 160 or 165. But we're going to keep it at the same strike price. And look, that's 15. That's pretty good. Do I think that this stock is going to go higher? Actually, yes, because it just broke above the previous high. Okay, so I don't want to ruin my chances of making additional money. So I'm just going to roll up one of them. Okay, so that my delta is still 43. That's still pretty good. But I'm getting back $1,165 minus commission. There. We got that, and now we have 44. Okay, let's move on to Starbucks. 5 of February is the expiration. We have plenty of time. Target. Well, this is a lottery ticket. Obviously, it's not going to work, and I really don't care. It's just no value there whatsoever. And then we have UPS, 22 strike price. I mean, 22 expiration. 22 is 8 days from now. Let's look at a chart. I am tempted to get rid of this trade. And I suspect it hasn't been doing well by the look of the, let's click at the symbol here. Let's reset. Now we need to see our current status. So let's reset. UPS. Huh. Okay, I tell you what. I want to see from the beginning. So I'm going to say here, let's go back 100 days. I want to see how much I've been doing on that UPS trade. Yeah, we haven't been doing well at all on this one. So here the P&L difference. Yeah, I need to get out of this. You are almost yeah, 2%, more than 2% loss on that one. Okay, so let's close that. Oh, hold on a minute. Let me just look at that again. Because I'm looking at 2 trades. Okay, it's just the one trade. We obviously we lost our money on another trade on UPS. Okay. Here we are, $800 loss. Yeah, I don't really want any more losses on that one. So analyze opposite. And let's close this trade. Okay, while we wait for those trades to get filled, let's see quickly, we have the Logitech roll up and the UPS, yeah, that's okay. This one could be adjusted. But before we do that, I want to contemplate new trades. And here on my Excel spreadsheet, I have considered 3 trades today. A DSK, and that one, let's see if it has changed. Okay, so I take my trade here, copy that. Let's go to here, click here, this little icon here, and order entry and paste. Here it is. That's my trade. Let's go to the analyze trade. Analyze trade. Here it is. Okay. Here we go. This is a trade. Is it the trade that I want? Well, let's see. Is trading currently at 311. The stock has been just going up and up and up and up, and the volatility seems to be still low. So let's see. Analyze trade. How about instead of 220, we do 210? Because that's the strike price. The current price is at that strike price. Okay, the stock price should match our strike price. There you go. Then April will be my stock, my expiration for the long options. And they need to be at least 90 days to expiration. So that's 92, that's fine. And the short should be about 30 days. That's 29, that's fine. Okay. Now, let's take a look at our Excel spreadsheet and say, first of all, we look at the size. We'll be back to this. Let's look at the earnings first. You can take a look at the chart. And here's our previous earnings was 56 cents estimated, $101.04 actual. And here it is, okay? Difference 85%. And so which means, you can trade that. Let's look at the volatility skew. For that, go back to the Analyze tab. And here you have your trade. Okay, so let's look at the options front month and back month. The front month is actually the lower side here. You can see the February 21st. That's my front month. Okay, 33.61, 33.48. But the long-term one, 37.13, 36.58. And the difference is 3.31%, very close to what is acceptable to me. Okay, if that's the only issue, I could still enter the trade. Here you have the numbers, okay, the volatilities. All right, now liquidity. How liquid this is? Well, it depends on the difference between mid and natural. So here we say create duplicate, and without sending it, we see mid and natural. Let's use those two numbers. Mid 68.43, natural 70.7. 3.2, also very close to what I consider acceptable. Again, those are very close numbers. And then the only thing that is the current IV percentile. The easiest thing for the IV percentile is to take a look at the chart. This is the IV implied volatility. You can see that is way down for the year. This is a yearly chart. It's at the bottom of the chart, the implied volatility. Go to the trade tab, and here you scroll down to today's option statistics. You open it, and it tells you that current IV percentile is 17%. Okay, that's definitely the third strike, so we're not going to trade it. Okay, we're very, very, very close, but no cigar. Let's move on to Target or Target. Let's see, quickly look at it. I think we already have a trade. Let's copy that, paste it here, and then analyze trade. Yeah, we just had that put. Let's look at a chart. Way up there, that's nice. Okay, is it a good idea? Volatility is very low here, historically speaking, for the year. Let's move on to our chart here. First, the earnings. Go to the chart again, and the earnings is 1.68 expected versus 279. Well, this was a while back, but you can see how interesting is. Yeah, the earnings were great, and that would have been a reason to get in, and eventually the stock took off. But now it's not so important. Just the same, let's put it here. Okay, so the actual is 2.79, and the estimate was 1.608. 1.608. So yeah, that would have been a stock to trade. It may still be a good stock to trade. Let's move on to our implied volatility skew. Go back to the Analyze tab, and here are our numbers. So April 16 will be my longs, my short will be February the 12th. So front month 26.29 versus 25.15. For the longs 29.74, 29.12. 3.751, again, close but not quite. It's a little too much, more than 3%. You could have known that right away. And then the liquidity, create duplicate. And we have 34.85 versus 35.5. And then it says trade. Good. So it's liquid enough. And the only thing we need to clear is the current IV percentile. Let's go to the trade tab and TJT. Again, today's options, and it says 11%. Yeah, that looks great, 11%. And it says trade, so that goes green. Only the skew is a little more than I would normally trade, but I would say everything else looks great. All right, let's copy our trade. Again, go to the Analyze tab and right click and say copy trade. Take that to my Excel spreadsheet just for, this is just to complete the operation to make sure we have everything that we need. Let's zoom in a little bit. Okay, so we have here 36.25. enter that number here, equals 36, 25. This is by lot, okay? So we could probably do 2 or 3 lots. How about if we did 3 lots, that would be times 300, okay? No, that's too much. That's more than 10% of my account, which is $91,000 right now. So I'm gonna do just 2, and that's definitely less than. Okay, so we're gonna do only 2. That means 2 shorts, 4 longs. And I'm talking about straddles, okay? The strike price is, you can see that here, 100. Great. Okay, so that's what we're going to enter, 2 lots. So you say create duplicate, and we're going to say 4 for the longs and 2 for the shorts. Make sure you enter this correctly. And we reduce the strike price, 34.85. We'll see if that fills. If nothing, we adjust. If not, we'll adjust, okay? And this long put we just ignore. Let's move on to our next trade that I'm considering is BBY. BBY is Best Buy. Let's go copy that. And I'm going to show you how to create this, so don't worry about that. Okay, analyze trade. Here it is, okay? Okay, we have June now because the options are very few here. Oh, we can do April here. Okay, how about we did that? Let's consider both, okay? Instead of June, let's consider April. Why April? Because April has 92 days to expiration. So I'm thinking 90 or more would be fine. Okay, so obviously that's going to reduce my price a lot. And look at the strike prices here. Okay. The different strike prices, no, the different strike prices have the lower strike price. No, it's the same strike price. I'm sorry, the different expiration. The April ones are 37% implied volatility versus 38%. And that was my Logitech trade. Okay, we need to compare those two and then see which one is the wisest choice. Okay, so let's first go to our, we need to make our spreadsheet all complete before we could move on. So let's go to the chart. And the earnings was 206 versus 1758. And I have it already, and you can see that's 17%. That's more than 10%. That's my minimum. That looks great. Okay, now we're gonna do the 2 expirations here. The two different strike prices. I'm sorry, expirations. This is the, I'm gonna put here the June expiration and here the April expiration to see which one has the better volatility skew. Let's go to the Analyze tab and we enter the June options, 38.61. Let me just make sure we can see that. The June expiration up here. Okay, 38.61, 37.85. Good. That's 38 on average. The shorts front month, 41.6, 37.93. It is a good things when you have the front month at 40 or more. Let's do the April here. 37.95, 37.35, 41.55, 37.95. Okay, we calculate the average of the two options for the back month and the same for the front month. Then we calculate the difference, and they both work. The April is a little more, but not a whole lot. Okay, so we could do April definitely. Then let's see which one is the better liquidity one. Okay, first the June one, create duplicate. I don't need to tell you that probably the June is the worst, is the less good volatile liquidity. Okay, so mid is 31.98, natural is 33.95. Difference of 5.8%, that's a little too much. How about the April one? $21.58 versus 23.55 is a little more. So I'm starting to think that the June is better, even though it says do not trade. It's going to have to be, if I do it at all, it would be the June, simply because the liquidity is better. And let's look at the current IV percentile, and if that meets our goal here, 11%, okay, 13%. 13% is acceptable because it's less than 15%, so we're going to do that Best Buy. Okay, let's copy our trade here as the one we want to do, which is the June one. Forget about the April one once and for all. Create duplicate, let's say copy that first, copy trade, bring it here. And we have, how many are we going to do? Well, the price is $31.93, so we might be able to do 3 of them. Okay, I think we just got something else filled. Let's look at the monitor tab. I'm still waiting for the UPS, but everything else, the target got filled. Great, it's only the UPS who is having issues. Okay, we'll be back to it in a minute. Let's move on to the Best Buy and say, okay, we want to do 3 of them? Yes, 3 and 6. Expiration is February the 26th, yes. June 18 is the expiration of the longs, yes. And the strike price is 100. Good, that's all there is to it. And I have a record that I could go back to in case I want to. Okay, we can close our Excel spreadsheet, save it, and just get my Best Buy filled. Here it is. Perhaps the price has changed, 32. Let's do that. Confirm and send. Oh, I'm sorry. We need to change this to 6 longs and 3 shorts. Create duplicate. Confirm and send. And it's 9.6. Very close. Perhaps a little too much. Let's do it anyway. It's right there and got filled. And now we just need to have our trade here, our UPS close, cancel, replace. And I'm just going to reduce my credit expectation until it gets filled. and I will make sure that it does get filled before the end of the day. That's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.
Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much.